Hey everybody, Sabi here, giving you a little update on our price action. I was surprised that this went up so quickly. I didn't like it myself, but it happened. Didn't want it to. I did not want it to break the all-time high, but now it did. It grabbed the liquidity, and kind of what I said, how this sold off. It seemed more like distribution, and what I did not want to see is this to go straight up because that would look like an upthrust. And it really does. It looks like an upthrust after a distribution range. Not necessarily calling tops. Usually tops go beyond that quite a bit more. The market maybe got ahead of itself, kind of anticipating more bullishness than was warranted. A lot of anticipation, a lot of hype. Weekend price action. We had a 3-day weekend, so that allows for a lot of price manipulation as you had this downward candle and then straight back up. So it's just shenanigans. But we pay attention to the closing price and what's going on with the closing price. And for right now, you do have a higher high close on the daily. I do like that. And also, you did break out of a trend line. If I can get it to work here. There we go. You had a breakout and a back test. And how many times is a back test? Does the back test even hold? Who knows? But this is a nice strong push down back test. So maybe we grind out this a little bit more or bounce and come back and hit it again. But you do have a higher high close on the daily. Let's see if we can get over to the weekly. If the weekly closes a higher high, I think it's game over. And this thing is going higher. But until then, maybe it's just more shenanigans. Been anticipating this area here to be repeating the price action from late November until mid-December. That whole price action to kind of play out over here and chop people up and down. And it's kind of been playing out so far. I did want to put on a box on top of all this price to kind of illustrate what's going on. And the way I usually draw my boxes is on candle closes. And then you can see where the wicks kind of deviate beyond the trading range. So we are still in the trading range, have not broken out. And I'm anticipating this to continue over here somewhat. Now, I do have the box divided in half for a top and a bottom section. So technically you are in the bullish area of the consolidation, and you should expect it to continue pushing up. If you start closing daily candles below, then you might be pushing for that lower liquidity. And I still do have that 87,600 target for wave 4 as a 50% retrace of wave 3 of the big impulse up. Whether or not we tag that, that's yet to be seen. Let me draw out the expected path, I guess. If this is the really bullish pattern, I had that ABC kind of matching with that ABC. And so far what followed it was that red closing candle right there. It's matching that pretty nicely. And you did have the wick that went up and destroyed all the shorts. So that kind of matches that. Did not get full follow through to the downside. The target for that is 97,500 or so. So that could come in coming days, maybe tomorrow, maybe the next day, or we bounce and then come back to it afterwards. Either way, doesn't bother me. But overall, kind of expecting an upwards-ish trajectory and then a large move down. So that's kind of why I put the box on there, is because once you take out the high again, I expect you to find support at the median range there. And that's right at like 99,000, something like that, 99, 99.5, and hold that as support. So you barely wick under 100K after getting to the top again. And you do have your resistances up there, so that does make sense that you would get up there and push down again before breaking out and holding above, mimicking this over here. So that would be ideal, and that would be your breakout. That would probably be early February, late January, or, yeah, late January if I had to guess, but probably early February. So patience is key. What we want to see is the market tagging the highs a few times to build liquidity up here. You got to watch where the market is building the liquidity. Right now, all the liquidity is taken up there. There's no more, well, there's liquidity at that wick now. So not a lot. You want to see the market kind of push up a few times and build more liquidity. And that, that would be short sellers, and maybe wear everybody out so nobody wants to go long so that the market maker could just take it up. But yeah, everybody bullish on the inauguration day that Trump was supposed to sign some executive orders that I don't think happened. I didn't hear too much about it. But if everybody's anticipating that, then everybody already bought. Who did they buy from? Well, they bought from the market maker or the whales or liquidity provider, whatever you want to call it. So that entity was net short. So they're not going to mark up price if they're net short. They're going to push price down. Essentially, when you're buying from them, they're staying delta neutral because they don't want to have price rip up while they're selling to you, so they have to hedge that with some financial instruments, and that usually means price has to go down. So if we are to remain in this area, the upper half of this range and stay bullish, that would be cool, and that would make a new Wyckoff reaccumulation range up here in this box. And then you would have some type of reaccumulation deviation below, back up inside. Well, there's an entry long, stop loss at the low, and expect to push up. That would be your first take profit. And back test there, that may be another entry after this being a show of strength. So you have your spring phase in this reaccumulation, show of strength, and then markup phase can come, February timeframe is what I'm kind of anticipating. So watch your trend. Your trend is currently down on the lower time frames, but since you did mark a higher high close on the daily, this is your last higher low. You want to hold, above the halfway point on the range. On daily closures, that's ideal, but certainly don't want to close dailies below like 96,000. That would not look as good, but technically still an uptrend and maybe maximum opportunity, especially if it closes back up inside the upper portion. That's where I would manage risk off of if I get that deviation. Now I'm bringing things a little more local on the 4-hour, and you can see where the uptrend on the 4-hour started. Higher high there. You maintained higher highs and higher lows throughout until right here. That gave you a lower low close, as I discussed in yesterday's video, giving you a potential for a sell setup, but this just went straight up, so there was no reaction at a lower high area, so not a great sell. This, I was tempted to sell that, but it is making a higher high, so it closed a 4-hour up there, so I was not willing to sell it. I was willing to buy a pullback, but I didn't like the way that grabbed liquidity. I'm anticipating liquidity down here. So what do I do? Well, I don't necessarily need to do anything. I am watching this 4-hour closure and see if we get a 4-hour closure lower. Then that would tell me to sell the lower high. So I may try that. And if it just blasts through, then it blasts through. But that's where I would expect a reaction of some sort. And then you can sell it short into 96,000, 97,000, 97,500, I think was my target. So kind of anticipating the potential for a reaccumulation range up here, so I'd like to see it bounce around and eventually grab the lows and come back up. But for right now, we are building liquidity underneath price. There's still liquidity over here in that little bit. So currently the market is building liquidity here. Eventually it's going to take it. If it takes it now, I'd watch for an uptrend to start on a 15-minute / 1 hour time frame, which your 1 hour would be probably above the daily open there at 102. Get a 1 hour closure up there by the higher low, then you can take it up. So far, I don't think there's any 1 hour higher highs happening yet. 4 hour is tempting to close a lower low here, but if price comes down and then immediately pops back up and closes the 4 hour as a higher low, that may be price action you're looking for to push up to resistance before a pullback and then potential breakout. It may happen a lot faster than I'm expecting, but I'd be on guard for that. I think there's still more liquidity to take up there, so price may come up there and grab it again and then flush down. Right now it looks like a rebalancing of the market maker's order book. We spoke about this in previous videos. You basically have a three-phase market cycle going on where you take 1, 2, and you're about to take 3. So there's your first leg, second leg, third leg to get maximum liquidity in this vicinity. And in Elliott wave terms, potentially count this as some kind of impulse up, and this would be like a wave 2. So if you do get a 1, 2, 1, 2, and then you break out, that would be a nice wave 3 that may push up substantially, a couple thousand, probably tens of thousands of dollars up if it does end up breaking up. But depends on how many orders have to be cleared from here. If the market maker / liquidity provider is going to put this into markup phase, they have to clear out any orders that are up here and feed them to somebody else so that they can proceed to markup phase. And this is what I was talking about in my last video. Watch for a move like that because they're taking those orders and feeding them down here into liquidity. They may have to do it again, so it might end up being a larger structure. Really depends on how many orders there are, so you always have to keep your stops tight and know your invalidation and take a little bit of profits. Nothing wrong with taking profits. I closed some profits up there from a little 1 hour buy setup, and I actually took some profits where I expected to have a sell setup, but there was no reaction, so I added it back on, and then I closed it up there. And then I got stopped out for the rest of it and wanted to add, but did not get the opportunity to add just yet. Have not seen a 1 hour higher high, so no reason to rush in. Like I said, I think they're going to play games in this area and or hit the 87,000 target. So treading patiently here, not leaping in, not chasing, just looking where's the liquidity, what is the market maker doing, and watching trend on the lower time frames. Because now that you have a daily uptrend potentially starting, you have a higher high, you need a higher low. So if you do get that higher low, hopefully that transpires into the weekly, and then you have a weekly higher low and a higher high, higher low situation on a weekly. And then you have the daily, and then the 4 hour, then the 1 hour, 15-minute, and then you're in alignment, and then this thing can get rip roaring. So watch what the market maker's doing, clearing orders, feeding the orders from one side of the pocket to the other side of the pocket, and maybe you're starting a range here. So don't get chopped up and know your invalidations. If that makes sense. I hope you guys understand what I'm kind of looking for. Daily candles closing above 100,000 is preferred. We could have a deviation below, but more closures in the upper portion is what I'm looking for, and continue to build strength and clear the orders before takeoff. So Hope that helps. Yeah, have a good night. Keep your stops tight.